Hello and welcome to today's edition of Property Question Time with me, Jemma Forte. This is the show where you get to ask your property-related questions to industry experts, and you also get, for free, some golden nuggets, those little nuggets of wisdom. So let's introduce you to today's panel. We have, first up, Aboody, who is the founder of MT Finance. And then we have Mary Anne Bowring, who is the founding director of Ringley Group. And then we have Paul Mahoney, who is the MD of Nova Financial. Welcome, all of you. Okay, let's get cracking. Paul, I might start with you today, just for a laugh. So your first question is this: buy-to-let, is it worth it? As it stands, I turn 28 next month. Lucky you. And I have 36,000 left on my mortgage. Lucky you. My salary is about 29,000 a year, and I've had my house 3 years next month and have overpaid on it since I've had it, using my, very clever, since using my 10% overpayment allowance each year. I've got about 12,000 in stocks and shares and a mutual fund which I want to keep going. Instead of overpaying, am I better using that money and saving for another deposit and getting a buy-to-let? This is obviously a fairly savvy person, so
yeah, sounds like they're doing quite well.
Yeah, really well. So needs some good advice.
Well, the two aren't mutually exclusive. Mm-hmm. He can continue to pay. I'm assuming it's a he. It may not be.
He or she. We don't know.
They can continue to overpay on their mortgage and essentially still be saving for a buy-to-let. And what I mean by that is by paying down the home loan, they can then remortgage the home loan to take funds out and use that to purchase a buy-to-let. So in fact, that's probably the best way to save.
Okay.
Because the rate that he's paying on his home loan is likely much higher than the rate he would get in the bank in a savings account. Whether buy-to-let is still a viable option, I'd say in the right circumstances, absolutely. However, there are more complexities involved now with all the recent changes with regards to the tax deductibility of mortgage interest, stamp duty premiums, and then also mortgage serviceability changes with regards to buy-to-let. So there's more to consider. There is a larger gap between a good investment and a bad investment. You shouldn't just assume that all property will grow in value and that you'll do well from it. I suppose seeking advice there is quite important. But yes, buy-to-let's still very much viable. Yes, I believe that everybody should be saving to invest, to build an investable asset base, but they don't necessarily need to be either saving or paying off the home loan. In fact, I'd say in a lot of cases, again, this isn't specific to their situation, but in a lot of cases, you're probably better off putting your extra cash into your home loan to then remortgage at some point to take the funds out and invest.
Excellent. Okay, thank you. I hope that helps. So Mary Anne is quite an interesting one. So a young, vulnerable male homeless person gets referred by the council to a charity who tell him that they have a room in a shared house. They get him to sign a 6-month contract, they'll get his housing benefit and give him £40 to live on. And then when he's later taken to the house, he realises it's not suitable, it's a bad area, at least one of his previous drug suppliers is very close. So he immediately says, no thank you. And the charity now insists that he has to give a month's notice and will claim his housing benefit, even though he'll never live at the property. So what are the rules about a contract in a case like this and a cooling off period, etc.? I mean, that's a fairly unusual situation, isn't it? But you can totally understand that young, vulnerable male trying to get away from the precise thing that's probably led to being in difficult circumstances.
Sure, an awful story.
Yeah.
But the problem is a contract is a contract, and really it's up to him to consider all things before he takes that contract.
Yeah.
He's also potentially got another bigger problem, that if he actually never lives in the property, I don't think it'd be legal to claim housing benefit for it.
Right.
Because you can't claim housing benefit for somewhere you're not living, because effectively that would be fraud. So he's kind of got, and if the contract requires perhaps a 4-week notice period, which is actually quite flexible as far as contracts go, because a normal tenancy might be for 12 months with a 6-month break clause. So he's really got to think hard about what he needs to do for the next month, because he won't get housing benefit on 2 places, and he may well have a contractual obligation to pay this month even if he gives notice, you know, the very next day.
Yeah.
So the real question is perhaps try to increase a circle of friends and advisors around you to not make bad decisions in the first place.
Yeah, okay, fair enough. Yeah, and it's just tricky, isn't it?
It's very sad.
What's
yeah.
so sad is it like a known drug dealer? It's like, can't they just arrest them? Yeah, difficult story. Thank you. All makes sense. Okay, Tom Air, time for you to answer a question. So this person says, I've seen a property I'm very interested in, but need to sell my house in order to raise the capital. Problem is that bungalows are rare where I live, so I don't want to take the risk of losing this one. Do I have any options while waiting for my house to sell? The bungalow's worth 175k, and my house is worth 125k with 8k remaining on the mortgage. My bank of 40 years say they can't help, and I'm too old at 58. Should I opt for a bridging loan?
I suppose these are circumstances which we, as an industry, see quite a lot. Because I mean, on that side, it's advice for myself to speak to an advisor to give you advice on how to deal with this. But there are lenders out there, both on the bridging space, and I've seen also in the mainstream market, which do lend to, inverted commas, people that believe that they're much older than they really are. That they're old. 58, you've got hopefully plenty of years left in you.
And in this day and age, we're working till about 80.
I think everyone needs to, I think, but I think it could be a viable option with regards to maybe going down the bridging loan, or definitely get advice out there from a broker, because just because your bank says no, there are possibly other viable options for yourself, because there are other lenders now who are diversifying into different markets or are able to assist people in their, older years, but they're not that old at 58. So I think there's definitely a few options out there that may be worthwhile considered. Yeah, I don't think it's a definite no-go.
Okay, would you agree with that, Paul?
Yeah, I'd say that's probably a fairly common misconception, is that people speak with their bank of 40 years and whatever their bank says, they take that as gospel, which isn't the case. There is such a varying range of criteria out there. And often you'll find that when people do have a bank of 40 years, they will be high street banks, and they tend to be the least flexible. So going down and speaking with them, fine if they can do it for you, but if they can't, there's likely, in most cases, somebody else that will.
Yeah.
So that is really the value of speaking with an independent broker that can look at those options and find something that may work for you, because there's one end, the high street, there's the other end, the guys that would almost lend to anyone but are very expensive, and there's everything in between. So it's worth exploring your options.
Yeah, and I guess everybody's going to have to adapt, because the population are aging, so it's not the same, is it, as when 2 generations ago went to get a mortgage, expected to retire at 60, and you'd have paid everything off. I mean, now first-time buyers are probably going to be 58. Give it a few years.
But I think, as Paul was saying, I think the market has changed dramatically, and there's a lot more availability for different kind of lending, for, the whole spectrum of age group, whether you're a first-time buyer, whether you feel that this is your last move or middle move.
Yeah.
I think it's worthwhile definitely speaking to a financial advisor, because he can definitely advise you on different options available.
Yeah, so talk to different people. People are out there to help. Yeah, okay. Don't take no for an answer.
No.
Excellent stuff. Thank you so much. Right, we've had 3 questions. Has anybody got a golden nugget for me before the break?
I've got one.
Mary Anne.
In terms of lease extensions, a question that when is a lease a short lease to buy it, and when should I not buy it?
Yeah, that's a good one.
So generally, as a charter surveyor or charter valuer, the RICS says a lease is short once it becomes less than 70 years. However, the marketplace tends to think the cut-off is nearer 80 years in most areas. And that's really based on the fact that if you want to extend your lease, marriage value, which is an extra part of the premium in buying a lease extension, is only payable if the lease has less than 80 years.
Right.
And between 80 years and 70 years, if you're going to stay there for 3 or 4 years, you're getting nearer to the cusp of the valuation crunch at 70 years. Albeit in certain areas, perhaps in Chelsea, a 40-year lease might be commonplace, but it's all to do with the ratio of loan to value that you'll be able to achieve.
Okay.
The other aspect really is if you're selling a short leasehold flat, the buyer has a disadvantage of not being able to extend their lease for 2 years. There's this waiting period. But there is quite a clever trick that the seller could serve the Section 42 notice to claim the right and then pass that right on to the buyer and perhaps negotiate something in the purchase price to save the buyer waiting the 2 years, because as the 2 years goes on, the lease extension price is only going to go up.
Okay, very interesting. It's always slightly confounded me that sort of 70 years is considered a short lease. How much does it cost roughly to extend a lease, or does it depend on the property?
Completely depends on the property and
Right.
location. I mean, there's three main factors. One is the ground rent you pay.
Yeah.
That could be £100 or it could be £500.
Yeah.
Two is when that ground rent is going to review.
Right.
3 is the value of your property and when the landlord will get that back, i.e. will he get his reversion back in 60 years, 40 years or 80 years. And the final part is to do with whether the lease has got more or less than 80 years, because the two parties, landlord and tenant, have to share the difference in the premium. So the difference between the short lease value and the long lease value, they share that 50-50. So you don't pay any of that element of the valuation if you've got over 80 years unexpired.
Okay, thank you, Mary Anne. Right, there you go, our first golden nugget of the show, and there will be more after this short break. Hello, welcome back to part 2 of Property Question Time with me, Jemma Forte, and my 3 guests, who today are Aboody, Mary Anne Bowring, and Paul Mahoney. Okay, Paul, I'm going to ask you, please, for your golden nugget for this episode.
Okay. I read a stat recently that said that 9 out of 10 people buy within 5 miles of their own home. Okay. Which, on the face of it, kind of makes sense. You know, they understand the area, they know which streets are good streets and bad streets, etc. The problem I have with that is when it comes to investing in property, it should be completely unemotional and commercially minded. And the fact that you live in a particular area has very little, if anything, to do with that area being a good place to invest. So I suppose I would encourage people to look a bit further afield. And as I say, make investment decisions or buy-to-let purchase decisions with your completely commercial hat on. And I suppose, getting the information, there's lots of information out there, you can seek advice or you can do it yourself, but making sure that when it comes to investing, you're doing it to make money, as opposed to just, being able to drive past your property every now and again. Because, if you have the right team around you, you never actually have to do that.
Yes.
It's more of an emotional comfort feeling.
Yeah.
Especially in the current UK market. The way that the market's gone is there's a major disparity between property prices and yields across different locations. London, the southeast, high value, low yield. Other areas, lower value, higher yield. So depending on what you're trying to achieve, those two different things can work for different people. But making sure you're making those decisions purely based upon investment, commercial mindset, as opposed to just being near home.
Yeah, okay, thank you. I suppose a lot of people probably don't view their home as a business asset, do they? And then can get quite stuck to one area. But yeah, for anybody that's hoping to make a bit of money, that definitely makes sense. Go further afield. Right, I've got a question for you, Thomas. So this person says, my mortgage application is not going through successfully because of self-employment and defaults, etc. So I've decided to get a bridging loan and pay it after 12 months using a remortgage. And I've got a few questions. So they're asking for security as I'm a first-time buyer. Can the new house be used as security?
In theory, yes. We see, obviously with the industry, especially if it's an unregulated space, if a client's buying a property as maybe a first-time buyer, as an investment asset, first-time buy-to-let investor, sometimes, unfortunately, defaults or bad credit will affect the ability to get a mortgage. People have had bad situations, they've missed a payment, they've missed a telephone bill or, a gas payment. If you're on an unregulated lender, you could take a view on that and give someone an opportunity to be able to still buy an asset if they feel this is a good investment. Using the security of the property that you're buying, yes, that's probably the only way you can really use and be able to get any loan from a bridging lender, because they typically wouldn't lend against anything else apart from property if you're in that space. So yeah, I think that's most importantly is get the asset, go across to one of the, get advice on who to speak to, go to maybe get a lender out there who's non-regulated, who's able to help in the buy-to-let space and give you a loan against that. Then gives you 12 months to 18 months the ability to refinance out, maybe by getting tenants into the property and looking that way. But yeah, there is, I mean, I think using your new asset is probably the only way, or one of the only ways.
If you've got bad credit, does it get wiped after a certain amount of time, like points on a licence?
There are periods when it does, I think, but then once again, you're going down the credit repair lending, and that's a completely different kind of like angle you're going down, and that's where you're getting advice on that from a financial advisor. But there are views of which banks can take on certain criteria which they will lend against. Maybe
So
if
like
you've
you said,
missed
they've just
mortgages,
missed a payment once by mistake, you know. And then
some people will take a view on that.
Yeah.
If it's missed mortgage payments and you've got historic ones of those,
then no.
then it's probably a no.
Yeah.
But if it's a gas bill or a phone bill, I think a lot of lenders out there will say, we'll give you a second chance.
Yeah.
But depends on who you speak to.
Okay, all right, thank you
course.
very much. So Mary Anne, this person says, I'm struggling to get my security deposit back from a flat that I rented for 4 years. The landlord and I are on good terms. He's agreed there should be no deductions, but the letting agents who manage the property have completely ignored our requests. Repeated phone calls and emails spread over 41 days. Oh, that would drive me mad. Since the end of the tenancy. The deposit's registered with tenancy deposit scheme, so what should I do? What options do I legally have to get them to act? There's not even a dispute, so can tenancy deposit scheme act in this case?
It sounds like you have a rogue agent there, because the government website says that the deposit must be given back within 10 days, and it uses the word must.
And you think most of those agents on the high street, like they're very legit, you know, they absolutely do that. So
Yeah.
is that bad luck?
It's good that the person who's asking the question said that they know their deposit is registered, because that suggests that the agent did at least register it within the time period at the beginning of the tenancy and provide them with a certificate and a reference number. A worse situation would be that they said they registered it but didn't. So their
I suppose
money...
we don't know that for sure.
No, but if the money is there, then it doesn't cost anything for the tenant to raise a dispute with the tenancy deposit service. Both parties have to agree to that as a dispute mechanism or dispute resolution mechanism. But if the landlord is agreeing and you are agreeing, then there's no reason that the tenancy deposit service wouldn't order the agent to release the money.
Okay.
Real question that's beginning to worry me is, does he still have the money? Did he actually register it in the first place? And what on earth could the reason be for delay?
Well, yeah, and actually I'm starting to think about in the past and, you know, asking these questions. You know, you give your deposit in good faith and, you know, I think a lot of us sometimes make assumptions without maybe knowing about the tenancy deposit scheme.
Yeah.
So I hope it is.
Well, you absolutely have to be provided with a certificate of registration. And every tenant should make sure that they have that and keep that safe in case they need to use it.
So that would be the very first thing to find out, is say, please can I see my certificate if you haven't got one?
Well, you can actually go onto the national database and go and get it. So if it's with them, it's not a problem. There's then two questions. Is it a custodial deposit or is it an insurance-backed deposit? In one situation, the tenancy deposit service have your money. In the other situation, the agent has your money.
Right, okay.
So it's a case of finding that out as to where you're going to get your money back from. But the tenancy deposits service website says that after a dispute is dealt with, they will pay your money within 2 working days. Here you have no dispute. So you and the landlord together need to go to that and get your money quick.
Okay, thank you. There you go. I really hope that means you're able to go and get your money that you're owed. Okay, Paul, somebody here saying, I'm not really sure what the best choice is for my wife and I. We're aiming to get on the housing ladder, albeit a little late to the party. Understandable. My wife is late 30s and I'm in my early 40s. We've got a child and another one on the way. House prices are very high where we live, so help to buy shared ownership appears to be the only realistic option. For the size of property we need, deposits required, a mortgage amount this way is affordable. So how do we get that deposit? We can't move in with our parents. We don't have any inheritance or the like, so it'll just be save, save, save. It's so hard these days, isn't it? What are the best choices open to us?
There are a few options that can help. There's the first home buyers ISA, where the government makes quite a large contribution to the returns.
Yeah.
I believe it may even be 50%. I don't know off the top of my head, but it's quite a large contribution. The government makes that on a yearly basis. Although I believe you can only save about £12,000 per annum through that or something. So it's not depending on the price of the property they're buying, I suppose that will determine how useful that might be for them.
Okay.
From a budgeting perspective, I suppose very simply how we often talk to our clients about how they should try to budget is allocate around 30% of their net monthly income toward their sort of accommodation, the other 30% toward living, and another 30% toward savings. Now, some people can't do that, but very roughly as a simple formula, that's something to aim for. And I suppose that extra 30% will help them save toward getting their deposit. Aside from that, of course, it's just generally being frugal, I suppose, that will get them there.
Yeah. Okay. Thank you so much. And good luck with that. Where there's a will, there's a way. Right, Tom Eyre, a nugget. I believe you owe me one.
So I'm looking actually today at the new buy-to-let landlords, the PRA rules which have come into play, where buy-to-let landlords, if you own 4 or more flat properties as investments, in order to buy another one, you have to declare basically all the information you have on all your previous or your current investments with regards to your mortgage payments, the rental, basically, chapter and verse on a business plan, how you be able to afford the payments if something happens with regards to mortgage rates going up or the tenants leave, etc., in order to buy a new property. On the bridging space, there are, on the unregulated side, lenders who, because obviously it's a buy-to-let investment, so it's an unregulated space, you're able to go, if they're not sanctioned by the PRA rules, which a lot of them are not, you're able to then go buy the property maybe quite quickly if you find something in an auction, take out 6 to 12 months to get your house in order, make sure you got your business plan ready, present that to your mortgage advisor, get that to the bank, and be able to then refinance out. But it gives you a bit more time in order to be able to buy an asset in the meantime, rather than having to provide all the information straight away, which you might not have access to or the time frame to do so.
Yeah. Would you agree with that?
Yeah, there's some fairly simple templates available to landlords to allow them to get those new requirements in place.
Okay.
A lot of people, it's only very recent, 30th of September it came into place.
Yeah.
A lot of landlords we're speaking with are saying, they're quite overwhelmed by what they need to do.
Yeah.
It's not as
the
difficult.
The goalposts have changed.
Yeah, it's actually not as difficult as it may seem. Utilise the resource you have available to you to make that an easier process to get to the point where you can have what you need.
Okay, all right. Yeah, it does interest me how legislation changes so quickly in your field. Just to keep up, you must be constantly swatting.
You have to be constantly aware of what's around you and be able to work with that. If it helps,
adapt.
You have to adapt. I mean, if you're not going, you have to. In order to go forward, you've got to adapt. And the government, is putting the regulations in order to help and make sure that we don't face any future disasters in the financial markets. So,
and I guess it's one of the first markets that they look at, isn't it, in terms of, we'll get a bit more tax from there, or
the investor side, exactly.
Yeah, but I feel sort of, in a way, sort of some sympathy for landlords that don't do it on a massive scale, because it is quite difficult. 1 minute that was really great, and the next minute that's less.
Yeah.
Okay, all right, well, thank you so much. That was really fantastic, and I hope you enjoyed the show. Now, if you've got any burning property questions, we would absolutely love to help answer them. So please get in touch, and we will do that on a future show. So you can email us, info@property-tv.co.uk, or go to our website. It's all there, all the W's, .property-tv.co.uk. So that just leaves me to thank my guest today. So thank you so much to Tom Eyre Aboody, Mary Anne Bowring, and Paul Mahoney. Thanks for watching, and we'll see you soon.